Usually when people come in to see us, they're often asking questions about the impact of bankruptcy. Will they need a loan again? What are the long-term effects of filing the bankruptcy? And the reality of it is that the bankruptcy is going to have a negative impact on your credit score. It just is. But if you're coming to see me, the odds of you already having negative impacts on your credit are already there. People are coming to see us when they're falling behind on bills, when they're falling behind on their mortgage, when they're falling behind on their car. And anytime you fall behind on something, you already have a negative impact on your credit. So it's not, the bankruptcy is going to put an end to increasing negative impacts. It's going to be one final negative impact, and then you're going to be building yourself back up again. If you're doing a Chapter 13 and you're making payments through the 13 as you're supposed to, and you're paying your car off, you're catching your mortgage up, this is going to have a positive impact on your credit in the long run. And when you get out of the bankruptcy at the end of the 3, 4, 5 years down the road from now, then yes, you're all going to be able to get loans again because your credit's going to be built back up again. If you have a home and you've been paying on your mortgage and you've caught your mortgage back up to the bankruptcy, now you're in good standing on your mortgage and your car should be paid off. And you may not need to have a loan necessarily right when you get done. If you're doing a Chapter 7 bankruptcy, Chapter 7 bankruptcies last much shorter. They're done in about 4 months or so, sometimes a little bit longer, sometimes maybe a few weeks earlier. And when you do the Chapter 7, that is again going to be a negative impact, just like a Chapter 13, because a bankruptcy is a bankruptcy. However, it depends on how quickly you can build yourself back up again on whether and what you're keeping in your Chapter 7. It is possible to keep your car in a Chapter 7. You sign a reaffirmation agreement, which we'll talk about in a different video. And when you keep your car and you keep paying on your car, now you've got your bankruptcy done and you've got your discharge of all your other debts. But now you're still responsible for the vehicle. You're making payments on it. They're reporting accurately on your credit report. And that just enables you to build your credit score right back up again. And yes, you will be able to get loans again after you get out of the bankruptcy. The rule of thumb is generally that banks will consider you for a home loan 2 years after you've done your Chapter 7. Of course, that's going to depend on the economy and the way that credit's being released, and also what's happened with you over those 2 years. But they will look at you and consider you again, and not just straight up tell you just don't qualify and move on. As far as getting an automobile, unfortunately with the way that things work, automobile creditors and dealerships will often send information immediately once you filed your Chapter 7 to try to sell you a car. The reason for that has to do with the inability to be able to file a bankruptcy again for a number of years once you've done your Chapter 7. And then getting a credit card, which I've talked about in a different video, getting a secured credit card, I usually recommend that about 6 months after you get out of your bankruptcy. But realistically speaking, if you've done your bankruptcy and you've wiped everything else out, and you can get yourself on a cash flow where you just are spending with cash and paying with cash and not utilizing or needing to have any kind of credit card, that's going to be the best thing for you in the long run, to where you won't have to come back and do a bankruptcy again.